What is the date? Welcome to Taking Stock on Friday, the 11th of August, 2023. And Kashmir John's here. You're right, John.
Not too bad. Not too bad.
What are you going with today? Sort of shirt, t-shirt combo. Are you warm? It's quite warm, isn't it?
Not in this room.
Isn't it? Well,
No.
yeah, that's because your flat there has got no window. It's just overlooking London. It's quite breezy.
I guess no sun on the back on this part of the house. So,
yeah.
Anyway, we won't get into that.
There's Joe looking around today. It's one of those days, isn't it? Tumbleweed day, pretty much, where there's no news. It's like you're looking around. As someone did comment on Twitter, said, when you got a change of address being one of the most read news items on the list, I think there's very lack of news about. But we'll go with what we got. And
it's still on the ground.
It is. It's summer, and like I said, the market sort of shuts down a little bit. People still sort of go away on holidays and stuff, and it doesn't really kick back in until September. But we'll go with what we got. By all means, hit that subscribe button because we may be changing times. Who knows? But if you hit that subscribe button, then you will get notified when we go live. And please do comment below. We have a comment actually from Phil, who's a regular commentator. And he did say, and I don't get bogged down in it, but it is a good point. We all talk about buying stocks, at the right level and what to buy, but we very often don't talk about when to sell a stock, So I would like your opinion on that and any thoughts on that. Because I know trading, different kind of thing. People generally look at the exit before their entry. Okay, if it goes wrong, what am I going to do? And so as investors, we often don't do that, do we? We almost just think it's going to go right anyway. And then we don't accept it's going to go wrong. And when it starts to go wrong, we think, I've gone too big in this or whatever. So it's almost worth looking at that. What's your exit before you enter, Do you have any plans like that, John, or just hope it goes in the right direction?
Generally speaking, I'm a buy and hold, long only investor. So, the exit would come when I feel that there's no more value to be created from a particular company, that it's reached the sort of peak evaluation. There's no more catalyst for further improvement. But I don't think I'm seeing that with much that I hold at the moment. I would be inclined if you'd had a sort of racy return on a sort of growth stock to bank some profits.
Yeah,
and they just cover the cost of that stake, so you don't end up in a situation where you're giving your gains away. As I mentioned the other day, the one thing I did sell was Somero, mate, because I got that wrong. I looked at the price and thought it was cheap, but underestimated the cyclicality to which it was exposed.
Yeah.
And I really didn't see much in the way of a catalyst, either sort of economically or otherwise for that to start performing again. And it has really struggled. So I sold that at a loss, and actually was the right thing to do because it kept the losses to a minimum. The one I've been looking at, and it relates to another comment, say BTI, actually initially did really well on this, but it's reversed and gone very much the other way. There was hope of sort of activist involvement and that it really has the infrastructure to sort of really sort of dominate this market. There was an expectation that it would sell its content division. Instead, it put that into a JV. So, lots of things have gone wrong here, and I'm thinking, should I crystallize that loss? But there has been a change of management, so I'm sort of happy to sit on it for a bit longer. It's in the doldrums, but cheap as chips.
Look at that. I mean, it's from like £5 a share back in 2015. I've had a mess around with that in the past, but and it's down at 115. The thing is, it's almost like that. When like my take on it is because I've spent ages. I do love investing, and I try and figure out every part of it. I try and figure out a solution for everything. And one of the things I'm trying to figure out recently, especially in the bear market, is if it goes wrong, what happens? Because we often, we always look at the reward. There's risk and reward for every investment, and we always look at the reward. We tend to ignore the risk. But I think if you focus on the risk first, and then try and cover that off, because you're investing in a company essentially because you see upside. There's risk, there's reward there anyway. But don't ignore the risk. Deal with that first, and thinking, okay, if this goes wrong, how much of a hit am I going to take on this? When am I going to admit to being wrong? For Somero, for example, when did you admit you were wrong? Was it a certain percentage down, or was it just a fundamental news, or at what point?
Just the news flow? It was just completely uninspiring. And
yeah,
I mean,
okay,
honestly, and I that's not necessarily criticism, but I wasn't seeing any signs of a trading catalyst there. In fact, I was seeing the opposite. So I just thought, this is going to get worse before it gets better, and that's been the case. BT, got that wrong as well. But it's a key, strategic part of the UK's infrastructure, and the shares are trading at almost forecast P is 6 times earnings. And you think, how much worse can it possibly get? So I haven't sold it. It's not gonna, even if it does get a little bit worse, it's not going to get fundamentally worse from here. I'm only down about 30%. There's a dividend to come as well, which is sort of kept the portfolio losses much more palatable than they otherwise would be. So it's not a disaster, but why sell at this point?
Yeah, well, do you know what? Someone asked me that, but in fact, I hope they don't mind. But Aterian yesterday said, should I just sell Aterian? I said, well, listen, I think the person was down on them quite a bit. So if they don't take up that much, and you've already taken the big loss anyway, if they don't take up that much of your portfolio, then why sell? Because Aterian have very good technology, and they could commercialize it. And I think the only thing that will make you more annoyed now is selling it and it rising, so that's really annoying. But I would say, on a mathematical point of view, if you literally, if you buy use a fundamental research, look at the chart, and it's looking like going the right direction, and it goes against you, then fundamentally, that old adage, if a company drops by 50%, you need 100% to get back to where you were, break even. So the figures work against you. So I think if you want to put a stop loss in at 20%, do it, or start off small. That's what I tend to do, is start off now small, and if it goes against me, but I still like the story, and the story hasn't changed, fundamentally, it's okay. It's not going to affect my portfolio. When you go big, you get really emotional about it, and you mess up a lot then. But start off small, or put a stop loss in, or something like that. But I think look at the risk first.
Stop loss is a subject for debate.
Should
you put hard stops in, auto stops that knock you out of position when it hits a certain level?
It's hard with microcaps as well, because they can be volatile. You get stopped out, they can rebound. So I tend to go with portfolio exposure rather than stop losses. I limit my exposure to it, and then it starts to go in the right direction. I can always average up. If it's knocking the ball of the park and they've come up with some cracking updates, I can average up. But
what is useful is soft stops. So just price alerts that if you hit that certain drawdown, then at least you're not sort of blissfully unaware that your shares are crashing. The other thing I would say about when you should sell is if the story has changed, if the company has said it's going to do X and it ends up doing Y, it's not delivering, or the backdrop's changed, or the market's changed, and that's the time to consider a position. Just going back to BT, this is the other thing. I'm looking at the board, new chief exec coming in. But you've also got the guy there, the chairman, Adam Crozier. This guy's a turnaround specialist. Done it a few times before. So it's management. Faith in management is also something to look out for when making that decision.
And one of the there's 2 scenarios in there essentially when you go into a trade, and when to sort of sell a stock. First of all, if it goes completely wrong, then you have to know when to sell. Or if it goes completely right and you can be overexposed, that's not a bad problem to have. And it keeps rising, and it's a big part of your portfolio. But again, if you get to the point where you're having sleepless nights about it falling back because you have such a big position, then just top slice a bit, reduce your risk with it. A couple of comments there. Old Dog 71 says, "Wing it." That's what he does. I'm in favor of putting a massive, rigid plan in there, but sometimes having a little bit of a plan, thinking if this goes down more than 20%, I'm out, because it's going to carry on. It's hard to get back. Small stocks can rally like that in a day easy, but bigger stocks, you start going down by 50% and you're in trouble a little bit, because it's going to take 100% to get back up there.
I've got, I'm not averse to a bit of winging it from time to time.
Yeah, exactly.
You remember that quote that came up the other day? Everyone's got a plan until you get punched in the face.
Yeah. Well, do you know what? Some of my best investments, I literally have researched for like 5-10 minutes, really understood it, and then gone in and then did some more research. But so companies have almost spent too long on researching, haven't done so well. So Alan Jones, for AIM stocks, especially those that have a large holding, sell down when sentiment changes. It saved me a fortune over the years. But how do you measure sentiment? You talk about the chart, or you just put your finger? Have you got the sense of psyche? How does that manifest itself? Sentiment? Do you mean the chart-wise, momentum? I don't know what you mean by that. Tell us, Alan.
You could use. Okay. Technical indicators can help.
Yeah.
Technical indicators can help with selling. There's what was the one? I can't remember what it was. I think it might have been 30-day moving average that can be a good selling signal.
Yeah, I like 50. It depends on what time frame you have. Okay. Talking about someone did say talk about funds here, and someone says LNG Global Technology Index, great fund, low cost and performing well since the start of the year. And then Phil came back in saying, careful on that one. It's 20% allocated to Apple, which in my opinion is overpriced right now. 20% Apple, 70% Microsoft, Nvidia, Google, of course, done very well recently. Yeah, in fact, the thing is, funds like that, who are leveraged towards those big caps, they've done really well recently. But it's a little bit of a worry if they start to roll over, isn't it? Because they take up such a big percentage of the S&P now. But
absolutely. So, why also buy a dedicated tech trust when you could just buy a very, 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 very cheap tracker? Given how much those tech companies dominate that market.
Yeah. Okay, let's go to the front page of Vox here. Fueling the future. 5 companies leading the energy transition with green hydrogen. So this is from Lauren there. And what are these companies? Is it a secret? Let's go.
No.
Atome. Okay.
Yeah.
Hydrogen.
So basically, hydrogen is it's one of those sort of future fuels that has been caused lots of excitement. Then it sort of died away a bit, and now it's coming back again. And the thing that the holy grail of hydrogen is green hydrogen. So essentially, making this fuel without emitting any carbon. Which is what grey hydrogen does. You make grey hydrogen from hydrocarbon. So these are all companies that in one way or another are producing green hydrogen. And there's some real commercial progress in here. I was particularly interested in AFC, who are doing lots of interesting work with sort of plant hire. They've developed these hydrogen power generators, and they've got a deal with a JV with Speedy Hire, the equipment hire group, to launch a dedicated hydrogen generator business. So it's becoming a reality. I've said before, I do think that after look at that tech hype curve, we sort of we got overexcited and we came back, and then sort of disillusioned. But I think we may be sort of on the way up to where hydrogen fits in, pragmatically into a future energy system. I think hydrogen is has been written off, and we could see some life coming back into this little subsector.
Yeah, do you know what I call it? The chart. I would say we're coming into a bit of a we've maybe. Well, in fact, a bit too early. But I would see these previous support here where it's bounced off that, and it broke down beyond that, and I was trying to get it back up to that. So then that is now resistance. So I would say it needs to go above this sort of level here. I do hold. By the way, Atome, who I spoke to a while back, that's very interesting. We're worth looking at those because they've got a board and connections. They're very experienced and deep pockets on that. So Atome is a smaller company, but they're doing. Let's go back to that.
Really interesting stuff, and they're doing it in as I've mentioned before, jurisdictions where you wouldn't expect necessarily this kind of progress to be happening. Is Paraguay is where they've got a lot of
exactly.
A lot of big
green
projects.
Green ammonia.
So a lot of these.
What's it called? Fertilizer. Green ammonia. So they're producing fertilizer. That's the product.
Yeah.
But they're using green ammonia to do that, and a green way to do it. But worth checking out the board and the connections. Just read the last few RNSs there. There's some very experienced people with deep pockets on the side of that company. By the way, I do hold ITM. I don't know why. I just bought it, and this is one of the ones I just bought. So big hope, high potential stock, and also it's one of the most. Where is it? One of the most shorted companies. It's just short track, and it's worth looking at this short tracker. It's one of the most shorted companies around. And let's have a look. Top 5. There we are. Kingfisher, ITM, Boohoo, Naked Wines, Hargreaves Lansdowne, Keywood. So I think if there's shorts, and in fact, it did reduce a bit of short. Who reduced? You've got the 8th of August, BlackRock reduced by a tiny little bit. But like I said, that has a massive hype around it. They've got some of the stupid, silly, small, minuscule revenues. And they're like a 500 million market cap. But I did see, I think
a lot of that's going to be cash, isn't it? I mean, they're sitting on a ton of cash.
Yeah, they've got about 250 million cash for last one I looked at, I think. But I quite like this because they've broken it above this sort of, like I said, this previous support level here, previous highs there, and they broke up. And now in this range, if they can break above that, it'd be quite nice. This range up here, but but it's ridiculous. One of these stocks where you should not invest in. There's no profit in sight. There's hardly revenue in sight. But it's just the hype of it. Like I said, one of those companies that went from nothing to a £2 or £3 billion company based on basically the hype of green hydrogen. You know, what else?
Got some results next week, incidentally. ITM 17th of August.
They? Yeah, they'll fall off on that then. Hydrogen Utopia is in there as well. HUI or Huey, AFC, ITM's in there, and ECTech, Okay,
cool. It's an interesting little subset to them. Yeah. Some really sort of projects that dovetail with the energy transition in there. So worth keeping an eye on. All of them have got horrible share prices. Yeah,
look at that. Look at that. It's gone from 4.4 to almost a 10 bagger in a couple of sessions, in a couple of weeks, and it's come back off now. And that's what people are hanging on to pretty much, is that the revisit of that, hopefully, you know. Let's what else on the front page of Johnny Boy? Or Chaarat.
Well, yeah, I mean, let's say slim pickings this morning. Chaarat is a gold miner.
Yeah.
I know this from many years ago. We looked at its operation. We actually, a colleague of mine went out to visit their mine in the high mountains of Kyrgyzstan. Wow. Terrifying video footage of him driving up there on these mountain passes through the snow because the helicopters couldn't fly because the weather was too bad. Absolutely terrifying.
Wow.
I mean, that Kyrgyzstan mine, they're still waiting to really go ahead with that. But there is production. Another mine, the Kapan mine. I'm a bit lower this year. I mean, the thing we've said about miners is, why is the gold mining sector doing so badly when the gold price is doing so well? And, you see it in this statement that the all-in cost of producing an ounce of gold is, has risen very sharply this year. Partly due to an appreciation of the currency. I think it's Armenian. Is it the Armenian dram? Did I get that right? Where Chaarat operates, but partly just because costs are rising.
Yeah, look at that. I mean, it's amazing. Gold peaked out 3 times, right, at just over 2,000 pretty much, and it fails to break that. But you can see here there's a higher low here coming in, so maybe it will break that 2,000, but it hasn't done that. Since 2020. But it's so it'd be interesting to see if it can break that 2,000 level.
But it's not trading at depressed levels, by any stretch of the imagination. No. And you would expect at these levels, that gold miners would be doing well. Their leverage plays on the gold price in the same way that an oil producer is a leverage play on the oil price. But as I say, those costs are rising.
That's a gold chart. So weekly gold chart is 1983, and it was down at $400 there. It's been the Bitcoin price a little bit there, and it's rising strongly. It hit sort of 1900 in 2011. I think that came all the way back down. Great financial crash. 2015. It didn't start to rally from. The great financial crash happened, come and went. Gold was still in the doldrums a bit and didn't start to rally till 2018 again.
Well, you've got dollar strength, obviously, is the converse of the gold price. So strong dollar, weak gold price. So you would have had.
Wasn't dollar weakening after the great financial crash because they were pumping money in?
And gold was rising. And gold was rising, and then you had a taper tantrum in 2013.
Very odd. Okay, that's gold. What else on the front page here? Let's have a look. QE, of course, lots of flights going out.
Heathrow booming.
What's happening with Heathrow?
Booming.
Is it?
Yeah, massive. I mean, it's getting back to pre-COVID levels. They've got through a lot of the problems that hit the sector. Last summer, staff shortages, real capacity constraints. Horrendous queues at airports. They're getting people through the airports quicker now. Big demand this summer because the weather's been so absolutely terrible. in this country. So people are sort of taking the opportunity to jet abroad at the last minute. So yeah, it's really been good for the travel sector as a whole. Although, as we've talked about before, that doesn't necessarily always translate into good performances at an individual level.
You know what? It's a bit like stocks and shares, isn't it? Right? People are in July, right? People are hanging on there for a bit of nice weather. They didn't get any nice weather, right? So they decided to book and going on is now in August. And now the weather's getting better. Just hold on, it'll get better. It's like holding a stock for a while. Alan says sentiment. He bases that on chart and volume, but it's pretty much. Old Dog says, I bought some Creo, and he did say he wings it. So he said, I bought some Creo Medical shares back in March for 27 pence with the full intention of holding them for at least 5 years. I love that. I love that. That kind of, when you plan things, they don't really work out. So with a in terms of holding them for 5 years, I do that myself. I'm laughing. So right, this is gonna be a long-term hold. And literally it dips down, I'm out. And right, this is definitely a long-term hold. Anyway, 5 years he's going to hold him for. Thought they'd be a 10 bagger. Then along came Destiny. I had no spare cash, so sold Creo at 34 pence, whacked it at Destiny, winged it slightly. Yeah, sometimes you have to do that. Then. You have to pivot a little bit. It's like with businesses, isn't it? If you start a business and something's not working, in fact, a good example of that is in lockdown. You saw a lot of companies pivot towards things for COVID, for tests, whatever, when they weren't doing that, and they started doing well. So sometimes you've got to pivot. If the plan isn't going to plan, you've got to evolve a little bit, especially with small caps, not so much with big caps, because they are mature businesses with lots of different revenue streams. But if a small cap is not working out, and you get a bit new business in, and then sometimes they have to pivot. But
I like that. That's bold. That's bold. That's decisive. That's that's good. No messing around there.
That is a classic, though. They're saying, I'm going to hold on to this for 10 years or 5 years. It's going to be a long-term hold, and then all of a sudden, right, I'm out in the next one.
It was the right choice, though.
It was. So there's that sort of instinctive, intuitive element, isn't there, to investing? And sometimes people say, don't ignore your gut.
I never ignore your gut. Never ignore your
gut. Especially when it's hungry. Right. So followed, in fact, a lot of people talked about Spectral yesterday after sort of a big heads up on that. We talked about it on the podcast about them going to NASDAQ for double the price. And in fact, it's still 49 pence. So the actual sort of like sort of takeover on the NASDAQ would be £1.1. If you didn't realize that, look at yesterday's sort of podcast. One of those read, Greatland Gold, and they seem to be exploring for a long time this Aterian project, and it's garnered a lot of hype because they had Newcrest come in, I think, for 70% to pay up 65 million in costs and all that stuff as they farmed in. And look at the chart, and and whenever they come out with anything, Greatland Gold, anybody news, it can literally be a change in address, registered office, and people will GGP, and people will read the RNS. But I did put a sort of a summary of what they're doing down there, but as yet, they still seem to be looking, exploring a bit, and they come up with a mineral resource estimate. But the chart there, you see why people like this, or why people still hold on to this, is because, they literally did 2,359% from December 19 to December 20. In 1 year, 2,300%. So you can see why the hype is around this. Will the hype revisit? I don't know. I think the deal was there's lots of rumors they're going to have a farm in from a bigger partner, and it did happen. So I don't know where the hype is going to come from next time, because that kind of hype you can't replicate, can you?
No. There's a lot of share prices that look like this. I mean,
yeah. Well, that's an exception. That's one of the most followed because of that hype. In fact, do you know what we overlooked? Well, we didn't sort of overlook it. In fact, I talked with John Mayer, Aterian. Now, they've had a similar kind of thing there. They have had Rio Tinto sort of overlooking their lithium assets, and they are still. So when that happens, it's worth paying attention to really small miners who have big companies coming in, because, Rio Tinto, they don't just jump. They're not like a old dog there. They don't just wing it. They do due diligence, and they do have, huge departments of people who look over sort of assets. So it's very interesting. They've just sort of they've got a joint venture with Rio Tinto in Rwanda for the lithium assets. So that's maybe worth looking at. But it's very interesting when it's like anything, isn't it? When you're a small company and a big company does some kind of partnership with you, it's doing due diligence for you, really. In some way.
Lithium everywhere.
Yeah, it is. Well, they can't. It is. It's like anything. In fact, companies on the stock market, especially on AIM, they pivot a lot, don't they? It's like there was a .com happened, everyone started changing them to .com. Lithium starts going on, everyone's got a lithium asset.
We need it. We need it. I mean, that is the bottom line.
Yeah.
Again, it's a market. It's not in deficit at the moment, but it's forecast to be in deficit as EV demand takes off.
There's, let's say, very little news. Investor presentations, set to update on share incentive scheme. That's number 3. Whoa, is that it? So there's not a lot going on, but the rises, apart from there's no news on strategic. This Emis, what's happening with
Emis? Well, this is. I mean, it's a takeover situation. Emis sells essentially record-keeping systems, electronic record-keeping systems for primary health providers, doctors, surgeries, that sort of thing. So basically NHS tech, and they got a takeover offer, which you'll see that nice vertical line there on the left, which took it up to pretty much the takeover price. And then, of course, the price fell off a cliff when the CMA, Competition and Markets Authority, announced that it was going to investigate the transaction. Can't remember who the purchaser is. Is it McKesson?
Let's remember. It's Emis. I don't know. Acquisition update. CMA. In fact, that's a good binary play.
Can't remember who it is. United Health. United Health. That's it.
Oh, that's right. When you get CMA involved in that, there's always a binary play there. Say the CMA. If a CMA comes out, there's not from the table. If a CMA comes out and says fine, then it just you have that kind of happening from 15. Just £19.
Yeah, do you know what? I mean, this was we did actually write a piece on companies that worked with the NHS to improve efficiencies, and we looked at Emis very briefly. This sort of, I didn't feel there was much behind this investigation. So there was a little arbitrage there to be had on the basis that the outcome would be in Emis's favour. Yeah. So that's why it's up. And it's a great company, but then there's lots of other opportunities still on the London market that are doing much the same thing with regards, supporting the NHS. Yeah,
I would say to you, if you not a regular visitor to the front page of Vox, please do go. There's content there, very good content, but also these are worth following. These give you inside, almost indicators. When you get a company most followed there, I mean, the share price hasn't risen. You think, why is it being most followed? Do some research, or a day's rise. If it's not good news, read the news and think, okay, why is it rising? It's just no news.
It's curious to see Majestic Corporation up there in the most followed companies, because it's it is really quite interesting what Majestic does. So
it's 8 million market caps for you.
It's small.
Position themselves for a micro cap rally, I suppose.
It's quite small. It's Aquis traded, listed. But what it does, for want of a better word, it's called urban mining, which is a sort of modern euphemism for recycling.
Okay.
So it basically takes scrap metal and pulls the metal out of it and sells it on. And what it's doing is building up a big network of source material, not too different to music, Magpie in a way, but for metal. And basically recycles it. And they call it urban mining because obviously this is done in industrial estates rather than big holes in the ground in Africa. And recycled material, because these looming deficits that I've mentioned in metals like copper and other metals, recycled material is increasingly the option to sort of plug some of those supply gaps. Recycling is massively important, and this is what Majestic does. Going back to the EV thing, I heard the other day after our program, I did a bit of reading, that the car is one of the most perfectly recycled products on the planet. So when a car reaches the end of its life, there's not much left of it that doesn't get used.
Yeah, well, not in our car. If you look at some of the stuff that our kids throw in the back, that is like toxic. That's awful.
Yeah.
By the way, someone said, I've looked at Mark's Electircal. They've been on with Paul a couple of times, and they did a trading update recently. And there's a strong period of 4 months. I don't know why 4 months. Revenue group, 30% up. That's very good, actually. because they are in white goods and all that.
It's not bad.
And they're driven by excellent customer service. What I like about this company, I said to Paul a couple of times, is that their founder is still there. And so literally, the pride of him, and so many founder companies do very well because it's their reputation. They built it. And they got a passion for it. It's their baby. And like I said, they pride themselves on really great customer service. Unlike probably their competitors, like national brands who are run by managers. And he wants to get it right all the time. So they're doing well.
I think this. I mean, it's a strange old market. I mean, there's a lot of capacity that was taken out of this market some years ago. Comet went pop. Yeah. But then you've got sort of smaller chains like Euronics, which are struggling, and what's the other, Hughes Electrical. Yeah, struggling and sort of retrenching. So there is sort of space to grow into if you can get that right. And if you ever try to buy anything substantial of a Currys, then you know why customer service matters. What I would say, AO World is actually quite decent as for a customer experience and pricing experience.
Okay, and their chart has been, well, do you know what? It's a very good time. If Doldrums are in and everyone's saying, oh, we're going to, cost of living squeeze, no one's going to buy anything, white goods and all that stuff. But that was almost the time to buy. And that you could have bought these for 55 pence. And like I said, they've doubled pretty much. And AO World as well. Look at the chart of AO World. It's like, I understand when sentiment is really down on a sector, that's the time to look at this. And I think that with I own XP Factories, really sentiment's really bad. But of the sector, look at XP Factory. That's the pick of the bunch. When you get sentiment so bad on a sector, there's some bargains to be had. And really, it's a world there. They're down at like 40 pence, 90 pence.
AO was a really good trade because they were getting out of some of the sort of underperforming businesses.
Yeah.
In Europe. So yeah, I agree. I mean, this is whatever the economic news is telling you, sometimes the bearish sentiment is too much. So AO is a really nice demonstration of that.
I did have some. Yeah, exactly. I did have.
I mean, also the thing is, if your fridge packs up, you don't not have a fridge.
You got a fridge pack up. In fact, do you know what? There's something like Paul did say about the stats on that. He said basically, not people looking for new stuff, but replacing stuff. Yeah, even that alone will make them do very well. Their customers, natural product cycle replaced all their stuff because they've run that broken or something. That's enough.
In a sense, it's almost non-discretionary. I once had my fridge packed up on Christmas Eve.
Wow.
Yeah, and that was.
What did you do then? Just go to the local garage and buy some Christmas dinner.
That's the one. Yeah, some ready meals. No, but funny enough, it wasn't. It was Euronics. So they were like, Euronics is a funny business. It's a European business, but they sort of, I don't know if it's franchise, but it's like a supply network for like local electrical retailers, and they very, very kindly let me have the one in their shop and bought it around the same day. So that was nice. Customer service like second to none, I would say.
Yeah.
I wonder if even Marks Electrical could do that on Christmas Eve.
Someone did ask Rich, by the way, he emailed me saying, can you have a look at Poolbeg? And it's a really recent news out, but I mean, Poolbeg and Verici, but Poolbeg's no news out. But you can see there, just on the chart, seems to have a nice little bit of support here. So if it breaks down below that, it may go down to this sort of level down here, previous support. But I mean, it's tended to rally or bounced off this level before.
Well, it bounces off good news, and there's really good news coming out of this company time and time again.
Yeah.
So if that is support, that's great. And the next update, which I'm certain will be positive, we'll see it bounce again.
Verici, have you seen previous? It's broken down for previous support here.
They look very similar, don't they? Those charts.
Yeah, but it's oversold. So unless they come up with bad news, I don't think they will come up with bad news, then it's going to go lower. But like I said, if you not cut when it broke down from that level, maybe hold. Okay, let's quickly go. There's not a lot of macro news around, but what I did find interesting, we were talking yesterday about AI. Have you seen that story on Rupert Murdoch? Basically, News Corp, his profits have slumped by 75%. So he hinted they're going down the AI route, which essentially means cutting staff and doing more for less. And this is going to happen to a lot of companies, I think. AI will help their efficiency and margins. And in fact, if you look at productivity in the UK, maybe that's needed. But what do people? You're still going to have people overlooking it, though.
You basically get AI drivers. This is the whole. People who can drive the technology. So the nature of the jobs changes. But this is the way the world has always worked. I mean, I still I still have question marks over the quality of the output of these things. Chat GPT makes stuff up, definitely. The language that they use, and I say this with from a journalistic purity point of view, is often hackneyed. Only goes back there's a couple of years of data missing, to bring the things really up to date. So yeah, I mean, I think if you're a news organization which is attempting to displace staff to save money with AI, then it might spectacularly backfire. Because people buy the Times or whatever it might be for quality.
Yeah, but I mean, the thing is, I know what you mean.
My former employer, the Financial Times, has an outright ban on the use of AI in the newsroom for journalism.
They're quite right. Bust.
They won't go bust. No, I think that's the right decision.
But remember, though, you get these generators. I mean, the people who feed them, prompters they're called, and the more information you get, the more accurate it becomes. So AI shouldn't be left on its own. There will always be, it's a quality control there. So just talk about right. So I think you just still have people writing articles, but almost like refining them, or with AI models that are tailored to your organization. They're not. It's almost like a brand kind of thing.
It's the foothills of this technology. Really, we'll see. We'll see significant developments, and then we should worry. But I think it's more telling. It's a more telling state of play of the newspaper and advertising industry than it is of anything else.
Yeah. Okay, so GDP, a bit boring, but it's up unexpectedly due to nice weather, and car insurance is at all-time high. But I think I'm going to finish today's show on Steve, who said, in Cyprus at the moment, 4-hour daily wait until the market opens, fill time taking the cat to the vets for nutrient a day, but can't do that every day. No, you can't do that every day. You can't keep getting that cat into being neutered.
Send him over some of the My Health Check tests from Boots, and he can have some fun filling his morning with those.
But also he does question. We'll have to look this up. Any idea why trying to close down the Christopher Mills Oryx fund? We don't know about that. Well, maybe look into that for Monday, John. Is it so?
Yeah, I don't know. I don't know. I'll have a look. What I would say, the investment trust world. And I don't think this is true of Oryx, but it's certainly true. You will see lots of mergers taking place in the investment trust space because, a lot of trusts are subscale. So the cost of managing those trusts when relative to the amount of money they have under management is too high. So then your fees are too high and they're uncompetitive. So you will see trust mergers. You will see some closures. You see managers moving all the time, taking trust somewhere else. But yeah, I mean, it's investment trusts are having a tough time. The average discount on an investment trust is, it's at record levels. Because they're getting the double whammy of weak markets, and weak sentiment, which means that things trade below NAV. So
and redemptions, well, not investment trusts,
you don't have redemptions.
Funds, by the way, redemptions from people selling. So yeah, double whammy, and that's why it's a good time to buy. That's why it's a good time to be, contrarian. Like I said, these stocks out there at the moment getting hammered on sentiment. And you saw Mark's Electircal and AO World, the time to buy those was when sentiment was down. So if you're looking at a long-term investment, good companies right now being hammered, they are good to be nibbling away, I think, right now. Anyway, that's it for taking stock this week. Speak you next week. Have a nice weekend, John. Speak then.
Thanks, you. See you later.